Come here, check this out. So you're a brand new trader, you want to learn how to trade, but you're missing some of the fundamentals. A lot of people don't understand what I mean when I say look at the shooting star, the doji candle, these types of candles. So this video is going to be a how to read a candlestick chart 101 level video. A lot of my videos assume that you've already started trading, but we're going to handle some of those assumptions, address some of those assumptions, and I'm actually going to do a number of 101 level videos here coming out for the next few videos. I do think you should watch these. These are fundamentals, but there might be some gaps that you can fill in your trading. And if not, you know, feel free to peruse some of my other videos looking at, you know, some more advanced indicators and things like that. We're actually just going to use today's price action as an example, mostly because I want to keep my eyes on the charts in case I want to take a few trades. I had a pretty good trade overall, did like 50 points, 2 in Q long, which is about $2,000 P&L on the day. Not a bad day by any means. Before we jump into that though, for those of you who are new here, my name is Forrest. I invest stuff. I'm a day trader. We have a Discord community. The links are down below. I am a funded prop trader as well. If you want to get some prop accounts, go ahead and use my code for 71% off. The code never expires, so feel free to use it now, later, or whenever. If the sale changes to 90% off, they often do 90% off. That same code will give you 90% off as well. Let's go ahead and jump into the video. All right, how to read a candlestick chart coming in hot right here. So we're actually going to we'll use NQ for this example, and we're going to look at the 5-minute chart. So if you haven't used this tool before, this is TradingView. It's just a charting tool. There's different types of tools. There's charting tools, there's trading tools. It's just a charting tool for drawing lines, shapes, and just looking at the prices of things. I don't have an affiliate or anything with TradingView. I just think they're the best charting software. So go ahead, go to tradingview.com, get your account. It takes 2 seconds. So you just decided you want to trade and you're like, man, I switched from a line chart to a candlestick chart. What the heck am I even looking at? Very, very, very simple. Let's break down this first candle here at the open of the session. How do I know it's the open of the session? Well, the market opens at 9:30. At the bottom of my screen right here, we could see the time scale, 9:30 a.m. Eastern Standard Time. The market is open. There's a huge green bar here. This bottom time series is the volume. So this down here is volume. We see that there is some volume over here as well in the pre-market, but this is the volume for each candle. And then we have the actual candlesticks themselves. Let me get rid of this alert as well. Don't need that. Sorry, 1 second. Man, I keep getting like sick. I'm behind on my videos because I'm like losing my voice. And I hate getting behind, but if you've never done a YouTube video, it's really hard to talk for like 10 minutes straight without pauses. I try not to do a bunch of breaks and pauses because it just makes it harder for my editor. Sorry for this part, but it's really, really hard to do that when you're sick and you get cotton mouth. So sorry. Back to this opening candle. So it's 9:30 a.m. We see a green candle, and there's some components to the candle that I want to break down. So we're going to zoom way in, way in on this one candle. So there is the body of the candle, which we see here as the wide part. The body goes from here to here. And then there are the wicks, which are these small parts on the end here and here. So the body right here, top to bottom from this price, 16,846.50, which we could see on the right side, the price axis of this ticker. This is NQ. Doesn't really matter. Ignore that for now. And then the height of the body was 16,864.50. The top wick was 16,871.50, and the very bottom wick was 16,832.50. So how do we read this candle? Outside of just actually looking at the candle, what's some information we can interpret from this? And this is actually really important as a trader because we're going to talk about different types of candles, like, you know, when there's a long top wick and a long bottom wick, and then a doji candle in particular. And that's really going to be all this video is about. But what's the story? What's the narrative of this candle? So let's break this down. Because it's green, that means that the price went up inside this interval. This is a 5-minute chart. Each one of these candles represents 5 minutes of time. So we see 9:30, 9:35, 9:40, 9:45, etc. So right at 9:30 on the dot, candle opened at this bottom part. So it opens at the bottom of the body, closed at the top of the body. So it opened at this price, it closed at this price. But what happened in that 5-minute interval? Well, at some point after opening here at 60,846.50, it actually went down to here within that 5 minutes. So at 9:30, it started here, it went down to here, and then at some point it also went up to here, but then at the end of that 5 minutes, it stopped here. So that's how you interpret that candle. We don't know when and where that happened, which is really, really important. This is a 5-minute candle. Imagine though that this is a 1-day candle. And what could happen is throughout that day, maybe the price it opened here and it went up to, we'll do it on the left. Let's say it opened here, beginning of the day, up to here. And then an hour before the close of the market, it came down to here, and then it came up to here, and then it closed here. So it could have done all that inside this candle. We don't know. The only way to know what happened inside that 5 minutes is to go to a shorter time interval. So I could go to the do 1 minute like this. Now my chart is super far to the left, and now each candle is 1 minute. So we look at the first 5. So 1, 2, 3, 4, 5. We could see here what happened in those first 5 minutes here, starting with the 9:30 candle. So we can see that in that first minute, it opened here, came down really fast, really right at the open of the market. Then it came up. And then that second minute, it literally just went up inside that candle. But we don't really know. We'd have to go even further down to see what happened here. And then in the next few minutes, it was pretty volatile. So that's how you read that chart. I called out specifically that we don't know when, sorry guys, I'm trying to get back to my opening candle here. We don't know what happened inside of that candle unless we zoom in. That's really, really important as a trader, guys. I want you to write that down. It's also important to not front run candles for that reason. And what do I mean by that? Because we don't know when these things happened, and this is a 5-minute candle, what a lot of people will do is they'll try to guess what the next candle is. I do that as well, but that comes with experience. You don't want to front run a candle too early because the candle can change dramatically in the time left for the candle to close. And if you're going to start to front run a candle, you have to think about, okay, if I know that this candle is most likely to close as an engulfing candle, but there's only 13 seconds left, what are the odds of that happening? Maybe I'm wrong, or vice versa. So that's how you read a candle. The information from this candle, we know that because this bottom wick is longer, it rejected this price. So we can interpret this as rejecting this lower price. That's how we might interpret this bottom wick. It's a pretty long bottom wick. So we opened, we came down here, we moved really far away from this price, especially if you look at the length of this candle. Within this 5-minute interval, we really came away from this price, came up, and we closed higher. So we really rejected that price here on this opening candle. And that's how you interpret wicks. So as we look through these candles here, let's use this candle as an example. This one here at 8:45, marked it with this yellow line. We can see that it opened, and outside of the open and the close, there was this little top wick up here, but not much else happened. So the auction, at least inside of this 5-minute window, from what we could tell here, there wasn't too much volatility outside of the open and close of this candle. Let's look at some other candles. So this bottom wick candle, this is called a hammer candle. It's kind of smashed on the top. There's different sizes of hammers. There's also a hammer candle, but it looks like a hammer. It looks like if you're holding a hammer in your hand, and the top, this is the head of the hammer, and I'll mark it right here with this yellow line. That's a hammer candle. In general, we can interpret from these hammer candles, just looking at these two right here, is that we rejected this lower price. The market wanted to move away from that price. I'm not talking about volume in this, right? Volume confirms, what these candles are doing, but because we could see right after this, we came down, right? There's like low volume tests and all these different things we could talk about. But for now, just know that the auction in general came down, it tested this price and moved away from it. And for whatever reason, it tested this price. But we know it tested this price, so then there was a wick up away from it. And then we could see that later we actually came back and traded, back into this price. You'll learn to, through experience, start to expect these retests of these wicks, or if there was a huge amount of volume on this bottom wick, that means that the auction really wanted to move away from this price and we'd actually expect higher. Just a little note for you for later. Let's find a shooting star. So a shooting star is the opposite of a hammer. So flip this upside down and it'd be like a star falling out of the sky. This is kind of a shooting star here. Let's find a good shooting star candle though. Gotta have one somewhere in this session. Let's go up to the 15 minutes, see if we could find something interesting. So here's a pretty good shooting star candle here. Shooting star, top wick, coming down. It's literally just the inverse of the hammer. And we're actually moving higher in this session. Still crawling up, chasing a VWAP and all these things. Let me turn this on really quick. Yeah, riding this second standard deviation band. See this yellow line here? See how the market is just creeping along this? Pretty interesting that it's doing that. It's almost like magic, but we're gonna leave all that off for now. You can watch my other videos if you want some information on how to read those. So that's that. Let's look at what happened here. This is a great example of a higher volume bottom wick. We'll get rid of this. We'll get rid of these lines as well. So this candle here at 11 a.m. This is the 11 a.m. candle. Oops, 11 a.m. candle. We have this bottom wick here. So let me go ahead and mark this wick here to here and look at the volume. So the previous candle volume is here, and let me actually make this, I can't make it bigger, but previous volume candle, or the volume on the previous candle is here, and then this one is higher, slightly higher here. So in this 15-minute window, we came down, we cracked down. I know from looking at the market that this was actually a retest of VWAP. I could push this on. I actually did a whole video talking about VWAP and using it, right? We cracked below right into VWAP, which is an average of the auction, is one way to think about it. And there was a huge reaction to it with increased volume from the previous candle. So now we're talking about volume analysis in this candlestick, reading video, but they go together. They really do go together. You can't have one without the other. Because like I said, sometimes you can expect a retest of a wick and sometimes we don't expect a retest of a wick. What's the difference? Well, the difference is the auction. If we see a huge influx of volume at the lows, so as price moves towards this, if we see a bunch of volume fly in, and one way to confirm that is to watch this on the 15 and the 5 minute. If we see volume at the lows that creates this wick, then we can interpret that as the market wants to move away from this price. That's just one data point. Doesn't mean that it will. There's other data points that we have to account for. before. If I was just looking at this in isolation as an example, the outcome of this data point is that the market wants to move away from this price. There's other questions I have to ask for: how long, how far, will we retest this price before we move away from this price? There's all this other information and other candles that I want to look at to add layers onto that. But this one data point is because we had an increase of volume at the lows, the market wants to move away from this price. And then we start to ask these other questions. Okay, what's another really important type of candle? A low volume doji. So a doji candle is one with a top wick and a bottom wick of the same length. Okay, top wick, bottom wick of the same length. And we can see that here at this 130 candle, 1330. It's 130 for those of you who still trade on normal time for some reason. So how do we interpret this? This is a continuation candle. So there's high volume dojis and there's low volume dojis. I want you to write this down: high volume doji and a low volume doji. Okay, high volume doji is reversal, low volume doji is continuation. Okay, that's how we read them. Then we ask the question: what happened before it? What happened after it? Do we think we're going to retest? Is the continuation going to be soon? Is it fast? Is the market fast right now? Time frame are we on? All of those other things. Which brings me to the last and most important part of this video, which is time frame. This is the 15-minute chart. So I should expect my reads on these candles to take at least, if not more, at least 15 minutes. So if I get a read on this and I say, oh, cool, hey, I expect the market to move away from this price, I should expect that to take 15 minutes. So if I entered a trade on the close of this candle, which was here, 16,880, and I go long, let's say I go long from here, I should expect this to take at least 15 minutes. What'll happen a lot of times is the next candle will open, and maybe the next candle opens here, come down, and then it'll retest this, and then it'll come up. But because people are impatient and they don't wait 15 minutes, they get smoked. So the time frame really matters. The time frame also dictates or determines your certainty level. So let me go ahead and write that down. Time frame dictates certainty. Not certainly, certainty. Time frame dictates certainty. So I'm talking about a reversal in the market and all this, but what's happening on the higher time frame? Always talk about higher time frame analysis. The 15-minute is really the lowest time frame that I look for identifying trades or deciding to enter a trade. Really, my actual analysis on the day, and I was doing this live today, is based off of at least the 4 hours. So let's go to the 4-hour chart. I'm looking at these candles and I'm looking for bottom wicks, dojis, top wicks, all of these things, right? I'm looking for volume with these candles. When I'm looking at this is I want to do this on the higher time frame chart, and I always want to find as much confluence between the high time frame and the lower time frame as possible. So let's write that down. Confluence is king when reading candles. Okay, you need confluence, because what's going to happen is, and I've done this, all traders still do this, and it's as you become a better trader, you learn to just, you recognize that you're doing this and then you stop doing it. But you'll see something on the shorter time frame and then you'll forget about what you said on the higher time frame. So today we were calling for higher in the market at the open. Today was super duper grindy, but because of what we saw on the 4-hour, really on not on NQ but on ES and on the higher time frames in general, I said I'm long bias. I'm looking for longs. And so with that information in mind, I'm looking for a long and I say, I see this low volume, or I see this high volume bottom wick here at 11 a.m. during today, and I know I'm looking for longs. I think we're going to go higher. This is a good price. I also layer in VWAP here. We came under the average of the session and average of the session. We won't get too deep into that, but we get under the average of the session. If I'm buying something lower than average, that's a good price. Cars normally cost 30 grand and you get one for 29,500. You got a good deal. It's not an amazing deal, but you did better than average. So that's a good price based off of the macro thesis. So you always want confluence, especially as a newbie, between your higher time frames and your lower time frames. There's a million exceptions. People loved telling me about the time, Santa rally didn't Sally and all the random whatever. But for newbies, and I'm telling you, you're not exceptional. You do not have the skill to do anything crazy. You need to be as systematic, strict as possible, and you need to come into the session where your higher time frame and your lower time frame reads go together. It's going to make it a lot easier, because what will happen is that even if you buy at a bad price today, because you did some higher time frame analysis, you're still going to end up green. If you're any good at reading candles, you could buy at just about any price in the opening, 30 minutes or so of the day, and you'd still end up green on the day, which is really, really important long-term as a trader. Just like anything else, once you're in the trade, there's nothing else you can do about it. When we talk about stops and all that, and I'll do some videos talking about, how to set your stops, truly doesn't matter. If you're looking at the higher time frames, as long as your higher time frame thesis isn't broken, then you could have a super wide stop, or you could have a bad entry, wide stop, and you still get paid. Not that you should always do that. We have to, not burn through our capital stack and there's all these different ways to think about risk. But again, higher time frame candles, confluence, add in other things like VWAP and stuff, and it'll give you a lot of confluence and certainty to take a trade and hold a trade, especially in a day like this where it's been super grindy. I got 50 points today. You're not going to get 50 points on a day like this unless you're willing to hold for like an hour, which is basically what I did. I held for a very long time, or maybe it was an hour. I think it was. These are 15 minutes. It was like 45 minutes, but a while. That's a long trade. And that's what a lot of traders aren't telling you. They're telling you to, look for this super clean signal and, fill the full value gap, blah, 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 blah. It's not that simple, guys. Cool. So talk about dojis, hammers, shooting stars, how to read the candle in general. For red candles, it's the opposite. So if you look at a red candle example, it means it opened lower. So let's just look at this candle at 10:30, market in with option V. So it opened here at this price, 60,902. It closed here at this price, 16,800. What is that? 81.75. And then at some point it went down and then went up. If I wanted more information, just like before, I could go to the 1 minute and see what happened at that time. We're looking for 10:30, which is right here. And yeah, it looks like on the 1 minute at 10:30, we started to do this little sell-off. You'll notice that there's way more discrepancies in volume on the 1 minute. But what did I say about time frame? The higher the time frame gives you more certainty. So you're gonna see all kinds of little volume pops, things like that on the 1 minute that honestly just become noise because the market's moving really fast. Whereas the complete opposite on like the daily and the weekly, on the daily and the weekly and the monthly, it is not noise by any means. The opposite of noise. If we see a high volume bottom wick on the daily or the weekly, that means the market wants to move away from that price, and we should expect continuation. And so we're looking for buys. So inverse is true. We see a high volume top wick on the weekly, the market wants to move away from that price. We might retest some of that wick, but I should be looking for sells, right? I'm looking to short the market at that point in time. That's it for this video though, guys. Thanks for stopping by. Subscribe if you haven't already. We're at 4.1K subs. Every time I record a video and say what I'm at, the number's always higher than it was. Super blessed. I appreciate each and every one of you. Sharing information is one of my passions. That's the only reason that I do this. So yeah, I love that, the group is growing. We just cut our Discord price in half, by the way. So check that out. There's a 1 week free trial, and we created a referral program. So your actual fee to the Discord could be free if you refer people to the Discord. So that's what the affiliate or referral program is for. If you have any questions, hit me up in the free chat. We have other traders in the free chat as well. You can trust them. They're great guys. They're great people, great traders. I literally sit and trade with them live every single day. But thanks again for stopping by. Peace to you in the next one.